141%. That is how much the Shanghai Composite has gained in the past 12 months, the most among major global benchmark indexes. This, as the yuan recorded its biggest weekly drop last week on the heels of weaker economic data. So should investors keep buying into Beijing? Our guest host for the hour is whom we go to understand China. It's fair to say this looks like a bubble. How long is it going to last? What is going to pop it?
It's interesting, Brendan. There was a 5-year bear market in China, and the Shanghai index was the chief victim during that period. So the 5-year carnage, the economy continued to grow, as you reported, month after month, year after year, and the market went from 60 times earnings to 9 times earnings. We've retraced a chunk of that, as you point out, during the past 12, 18 months. And portions of the Shanghai, particularly the A-share market, are bubblicious. But there's no question that still large swaths of the Chinese market are still reasonably priced, given history and the prospects. And back to Vani, I should say, the curious incident of the dog barking, very good.
All right, then.
All right.
I'll have to go.
Well, so give us a tour. Help us understand the distinction then between the Shanghai Composite and the Shenzhen Index, which also really is just a hockey stick, right?
Yeah, you have this portion of the market, the A-share market, which was priced always higher and really got slammed. But it was because of the supply-demand characteristics. What the Chinese government has continued to do, and we talked about this in the earlier segment, go back to self-interest. They want to do what's good for China, good for themselves, good for the party. They actually have figured out a number of tools, not just money. They're throwing money at it. The reason the market went up 2% in China and Shanghai overnight was because the numbers were so lousy. People say the government's going to do stuff. Well, it's not just money they're throwing at. They're doing links between the mainland and Hong Kong for doing, and there was an arbitrage. They got really smart traders in China. The individual traders in China, now they go crazy. They borrow lots of money, but they really are very good.
Away from the bubblicious, as you call it, is your perspective on emerging markets changed in 20 years? Is it now self-sustaining? Is it now more of a structural oomph where it used to be wildly cyclical, where you'd get killed if you didn't hedge? I mean, is it a different world now in emerging markets?
It is different. The world continues to evolve, and so India isn't what India was 20 years ago or 10 years ago, and China isn't what it was 20 years ago or 10 years ago.
Is it buying?
Now, Russia, by the way, is part of the BRIC, what we used to call it, and that's part of an emerging market, if you will. But I think the emerging markets, Sri Lanka and Malaysia, those are still, all of that's the same.
Okay, they're effervescent right now. I get that. Is it buy and hold, or is it a buy and pray strategy?
And how about neither of those, none of the above, and then you go to find someone on the ground who can sniff out the opportunities for a really good story. But I think it's always been risky, dangerous, and very, very profitable if you get the opportunity.
Because my experience, Brendan, is it's a great way to reduce your retirement account.
Yes.
Well, this is the tale as old as time. The local traders are always fleecing people coming in from the outside world who don't completely understand the market. You say, going back to Shanghai, that what we need to do is not look at the index as a whole, but distinguish among industries that are listed there. You help us do that. How do we make those distinctions?
Now, don't laugh. This is not a joke. Banking industry, I mean, you've got, as we talked about with the 60% tangible ratio with Deutsche Bank, you have the same thing going on around the world, and it's certainly true in China. It's certainly true of the bank. When the banks went from 60, when the Shanghai went from 60 to 9 times, the banks were 4 times.
I got to rip up the script. Over the weekend, the buzz was Goldman Sachs research note chastising corporations for use of cash. Are you kidding me? Mario Gabelli aged when he read that. I mean, is use of cash end? I mean, Goldman Sachs is lecturing corporations on use of cash?
Yeah, they don't want them buying through their trading desk, their stock back. What they want to do is go to the M&A and pay big fees.
Yeah, exactly. I mean, that
was easy.
Funny,
that was easy.
That's dead on. I mean,
that's good.
Where are we on use of cash right now, Michael Holland?
I think the companies that I pay attention to have done a pretty damn good job over the last 6 years. I'm thinking of things like companies like Apple, and the biggest buyers right now of corporate bonds are the companies with their cash. They've done a great job with their cash. I mean, the economy around the world isn't very good right now.
This is like every 8 months, use of cash is dead, and everybody goes, yeah. Mario Gabelli goes, rah, 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 and that's it.
Yeah, no, and it's true, and there's so much of it overseas as well, Michael.
Yeah.
So what's going to, I mean, and you know, it's not really growing a company to buy back your own shares. It's not growing a company to give out bigger dividends. Right. So what are companies going to do to achieve growth?
Well, in addition to investing in people, I pray to God that we end up with more wages in the future, pay more people more money because they're growing the business.
So they won't
right. So we're not doing that right now, but that could be a change. So I would hope that's part of the future. I would hope part of the future is investing in capital equipment. I would hope that part of the future continues to be M&A, which I think it is.
Yeah. Brenda, Deutsche Bank, 5-year dividend growth, 6.5%. That doesn't get it done. I mean, that's a perfect example.
But again, this is with Deutsche Bank. One of the things we've been trying to figure out all morning long is what exactly should it be? What is it allowed to be? And it has that problem that so many other investment banks don't, which is that it's forced to be an international bank without real domestic support. It's not a big German bank. It's a German bank that's big elsewhere.
Yeah, this new guy will do a decent job at figuring out what is possible. And back to Vonnie's question a second ago about what can U.S. companies do. Mm-hmm. Well, there are only so many things they can do. Unfortunately, one of the few things they can do is buy back their stock. It's not a great option, but it's one of the things they can do rather than just let it sit there. And for the new management of Mr. Cryan coming in, I think among the things he can do is invest in the businesses that he thinks can grow. But they are a national champion, so he can trade off that.